Hello and a warm welcome to Talking Stocks. I'm Gugulethu, Cele. In studio with me is Sean Ashton and Bryan, both from Anchor Capital. Now today we're talking Apple Inc., formerly known as Apple Computer Inc., a multinational corporation that creates consumer electronics, personal computers, computer software, commercial servers, and is a distributor, a digital distributor of media content. Apple Computers Inc. was founded back in the 1st of April 1976 by college dropouts Steve Jobs and Steve Wozniak, and today is arguably one of the most successful companies in history. Gentlemen, thank you so much for joining us. I take it none of the viewers need any introduction to Apple, but maybe if we understand just again the components that actually make up this mega monster of a company, especially from an earnings perspective.
I think it's important to understand how this business has evolved, and many people around the country, certainly, and around the world will have first-hand experience of owning an iPhone, and this has really become an iPhone business. They started off selling computers, as you've rightly pointed out, but with recent launches of a lot of very successful larger screen phones, the growth in the iPhone product has been absolutely spectacular, and it's now close to 2/3 of revenue and probably even more of profit.
Now, we had previously touched on this company, I think just over last year, but they recently did publish results. Why is this important for you to always monitor the progress of certain companies, Bryan?
Well, that's it. At Anchor Capital, we ensure that when we enter into a position, we continue to monitor these companies. We're not necessarily just looking for the latest and greatest idea. If we have companies that are solid, we go back to them, we revisit them, we make sure that this still is the best opportunity for our clients, and Apple definitely fits that criteria of a quality stock that we still hold and have a high conviction in.
Well, Sean touched on it very well, that it is probably best known for the iPhone. But following the most recent results, your thoughts on the mixed reaction we saw in the market, though?
Yes, we saw the market pull back slightly when the results came out, and we think that this was just really a bit of a knee jerk. It has rebounded very slightly from there, but the market looked at this and thought, well, hang on a second, there's this tapering of sales, there's this decline in the iPad, there's no mention of the watch. So what's kind of going on here? I mean, they had record growth, it was a record quarter. We do know that the third quarter is the lowest quarter that they have on a rolling annual basis. So, when we look at this, I think the market overreacted. They were good quality results, they were good numbers, they were strong numbers. And I think it was an opportunity for people to get in actually at a lower price. So we were quite happy to look at it, analyze it, understand it, and continue with our holding position in it.
Sean, excuse me, I just want to get your view on this particular stock as well. You're still a favorite maybe in your books, especially given what we saw in the results and maybe looking at the revenue for the quarter performance.
I think there's some short-term concerns. It's not right to say that it's all roses, but I think it's important to point out that there's not a particularly good scenario painted into the valuation. So you're not overpaying for an expected growth rate that might or might not come through. The expectations around growth certainly into next year are very low. The consensus is about 7% or so sharp slowdown from what you're seeing right now. And at the same time, the market's putting a forward 13 times P multiple on those numbers. So I think the market's concerned that this business has become very big and can't get much bigger. And as a result, there's not much bullishness painted into the valuation. I think in terms of this specific set of results, the concerns to talk about relate probably more from our side to forward guidance that they've given. So when we go through into the fourth quarter of the year, they're saying that they expect group sales of between 49 and 51 billion. So call it, let's say, 50 billion on average. And it's important to understand the base effect. So when you look back over the last few quarters that they've reported, before the iPhone 6 launch, growth rates were running at probably between 10 and 20% from a revenue point of view. And when the iPhone 6 launch came in the first quarter of fiscal 2015, that growth rate jumped up to 50 to 55% from a revenue point of view.
Sure.
And it's been sustaining that rate ever since because you didn't have the iPhone 6 launch in the prior year base. The trouble now is that what they've said is that they're expecting revenue of more or less 50 billion as we go into this quarter, which is 20% up year on year, down from 33% for the whole group in the previous quarter. So a big slowdown in growth, but yet that's still including a prior year base that didn't have the benefit of the phone. So what the market's looking at is they're saying, there's probably a 10 to $15 billion positive impact that we've had quarterly from the new phone launch. And once we move into the first quarter of next year, unless they've launched a brand new product or a big new phone launch that's more successful, that rate of growth can taper off very quickly. It might even go to naught. That's the risk.
What about the watch here? If we look at that graph on screen, clearly it isn't there just yet, or it's situated in other products, which clearly doesn't contribute as strongly to revenue like the iPhone there. But are we concerned about the watch? Or
sure, it's
new
5
products?
or 6% of sales is the other product, which obviously includes revenues from the iStore, etc. And they haven't disclosed unit numbers, so I think it's early to tell. I think that's the first point I'd make. But certainly the market's not betting on the watch being a massive slam dunk product for them. Certainly not when you look at the revenue numbers that are expected for the coming year.
China though, will that still play an influence though, Bryan?
Very much so. We have seen a slightly changing demographic based on what's happened in the Chinese market of late. But this is an area and a very big growth area for them. Only 12% of the market has access to 4G LTE. So as that grows, the ability to have smartphones in various areas grows as well. China grew at 112% quarter on quarter for them. So it was a massive step up that they've doubled their presence there. And they still have only a fraction of the market. So you're sitting in an area that the technology is advancing, the brand is getting a brand awareness, which I think is one of the key things that Apple has established through time, is it's a brand. People want this brand and they're prepared to pay extra for the brand. So I think the Chinese market will continue to grow for them, continue to drive forward. As Sean's mentioned, from the growth and the sales and the expectations, I don't think you're going to see 100% growth all the time, but that growth will slow down, but it'll still be a very big market. You've got scale, you've got the numbers, definitely going to be key for them.
If we continue to look at that graph of revenue by region, though, the America is still a significant contributor, given the fact that the US is picking up now, economic growth expected to come through. Is that particularly a market that might continue to perform quite strongly, especially in iPhone sales?
Yes, I think that Apple is American. People like it, they're moving it across. And just one of their surveys that they did, most of it indicated that a very high percentage of Android users were actually moving across to the iPhone within the American market.
Sure.
So they've really developed a presence, they've got a good product, and the American consumer is prepared to spend. The new i6, or the iPhone 6, had the bigger screen, and then they had the 6 Plus, which was even bigger. That was predominantly driven by the Chinese market and their desire for the bigger screen, but it's been very well accepted in America. And the American is now looking at a single product. So we've seen iPad sales come off, there's no more iPod, it's a very, very small fraction of the business. But that technology that we're putting in the iPod and the music is now moving across to the phones. So people are buying bigger capacity phones. And we've seen that price point move up to $660 per item, per phone. So the American market wants this product. They've driven the sales, and the growth of sales continues to be there. So
if we look at Apple and maybe compare it to, you mentioned Android, to the likes of Samsung and maybe even other technology stocks like Google, which also came out with numbers recently, why do you still continue to like this?
So I think, the valuation's lower than certainly something like a Google. It's a very different business. I mean, this is a hardware producer. It certainly trades at a premium to companies like Samsung. I would argue that there's a bit of a halo effect around the brand, which perhaps the likes of the Samsungs haven't yet achieved or haven't successfully achieved. So there's almost an element of luxury appeal to an iPhone product, and just the look and feel of the hardware for non-techies, if you like. A lot of people will criticize the fact that it's an iPhone is a closed architecture, or an iMac is a closed architecture system. But for bread and butter users, it's just a fantastic product, and I think it's got widespread appeal. Where I'm quite encouraged, I guess, is that because all of the naysayers on the Apple investment thesis say, well, this company is just too big, it can't become bigger. But I think what I find quite encouraging when you look at the phone side of the business, which is really the key profit driver, is that they're still smaller market share-wise than Samsung around the world. Now, is it conceivable to me when you look at Samsung at a 24% market share with their phones and Apple at an 18%, can that switch around the other way? I think it can. Which to my mind signals that there should still be room for growth for this company.
And to expand further on the investment case, cashbacks and buybacks rather, and dividends? Yes,
Apple has so much cash that it's pretty much in a point where they don't know what to do with it. You're now sitting at just over $200 billion in cash. They have a plan to do buybacks. They've been allowed to do about $150 billion worth of buybacks through time. They've done about half of that to date, with the rest coming through. They're also returning shareholders. They've got a dividend yield of about 1.6%. And my personal view on Westwood is, through time, that potentially the incentive to return more cash to the shareholder will be there. They also helps to engineer the growth that comes through into the earnings per share when you're taking out the number of shares or lowering the number of shares in the equation. So I think the cash is a big driver for this business, or can be a big driver. And again, at the moment, it's put a bit of a drag on it. So you're not getting a return on that. Most of that cash that's outside of the US, earning negligible returns. So you're pretty much getting zero return on nearly 20% of this business.
Well, let's find out now from our experts whether it's time to buy, hold, or sell the stock. Sean, let's get your view on this particular stock. I think I know where you stand, but buy, hold, or sell Apple?
I think it's a buy. I think the expectations are quite low. So you've got a lowish earnings forecast by the market for next year, following a very good year this year, and a low PE multiple being placed in that number. And I think the market's not giving Apple the benefit of the doubt for their historical ability to have ingenuity and actually come up with blockbuster new products.
How much of that, though, was linked to Steve Jobs? Because I think he was really the face of the product, right?
I think he obviously created the genes and the culture for this company. But the subsequent launches that you've seen long since his passing have demonstrated that I think they've still got it.
Your view, Bryan? Buy, hold, or sell?
I'm very much in the buy category, but I do think we need to potentially temper expectations. This company's had a fantastic run. Share prices appreciated quite dramatically over the last few years. I don't think we're going to see that run rate of share price going up, though. So from an absolute return, but you're buying a fantastic company, high quality, at a very attractive valuation.
Well, we'll leave it on that note then. Clearly to buy or hold your positions then for Apple. I'm afraid that's where we leave it for this week here on Talking Stocks. A big thank you once more to my guests, Sean Ashton and Bryan Rudd, both from Anchor Capital. Be sure to catch us next time where we talk more stocks.
For the latest fundamental and technical analysis delivered right to your inbox, log on to talkingstocks.co.za and sign up for the Talking Stocks newsletter.